Semiconductors are the silent heroes of our time. They power your smartphone, car, computer, and even your washing machine. They are the bedrock of the digital economy, driving innovation and progress across countless industries. Without these chips, the world as we know it would simply grind to a halt. Engineers are in a perpetual race to make semiconductors smaller, faster, and more powerful. Think about the phone in your pocket today compared to one from a decade ago. That leap in capability is largely thanks to advancements in chip technology. This progress requires incredible precision and massive investment. The journey of a single chip is a truly global one. A chip might be designed in the United States using software tools from another country. The silicon wafers it's built on could come from Japan. The intricate manufacturing process might happen in Taiwan or South Korea, using highly specialized equipment from the Netherlands. This intricate global supply chain highlights an incredible interdependence. No single country currently masters every part of this complex process. Control over semiconductor technology translates directly into economic strength and geopolitical influence. This is why the current tensions over semiconductor access have escalated into what many call a chip war. The United States has decided to tighten its grip on advanced technology flowing to China. In January 2025, the Biden administration rolled out new regulations. The primary reason cited was national security. Washington is concerned about China's rapid military modernization and ambitions in cutting-edge fields like artificial intelligence. The new rules target the export of certain advanced AI chips. Foundries and companies involved in packaging them now face broader license requirements if they want to ship certain semiconductors to China. This directly impacts global giants like Taiwan's TSMC, South Korea's Samsung, and American companies like Intel. The message is clear: the United States wants more control over who gets what. A key focus is to prevent advanced U.S. technology from being diverted to Chinese entities, particularly those with links to the military. The discovery of TSMC-made technology inside an AI chip from Huawei set off alarm bells in Washington. Companies are now being urged to conduct more thorough due diligence on their customers. The U.S. Commerce Department has outlined new guidelines that create different tiers of restrictions for AI chip sales. The goal is to strategically curb China's ability to develop and deploy advanced AI for purposes that could challenge U.S. interests. The Netherlands finds itself in a delicate position in this global chip tussle. It is home to ASML, a linchpin in the semiconductor world. ASML produces highly advanced lithography machines essential for manufacturing sophisticated chips. This puts the Dutch government in a tricky spot, caught between intense pressure from the US and its significant economic relationship with China. Responding to this complex geopolitical environment, the Netherlands introduced new export controls effective April 1, 2025. ASML is now required to apply for export licenses for certain types of its measuring and inspection tools. These new regulations add another layer to the restrictions ASML already faced. The most prized technology, ASML's extreme ultraviolet (EUV) lithography machines, remains firmly out of China's reach. This effectively creates a technological ceiling for China's indigenous chip manufacturing capabilities. The combined force of US and Dutch restrictions is delivering a significant blow to China's semiconductor industry. Beijing has long declared its goal of achieving self-sufficiency in this critical technology. These new export controls are designed to slow down that march towards independence. By limiting access to key manufacturing equipment and advanced chip designs, the West is directly challenging China's ability to climb the semiconductor value chain. China has poured billions into building its domestic chip industry. However, creating a world-class semiconductor sector is incredibly complex. One of the biggest hurdles has been mastering advanced lithography, where ASML holds a near monopoly. Despite massive investment, Chinese companies have struggled to replicate ASML's precision and sophistication. The impact of these restrictions is being felt acutely by China's technology champions like Huawei and SMIC. This directly limits their ability to produce cutting-edge semiconductors, hindering China's broader technological ambitions. ASML's CEO, Christophe Fouquet, provided a sobering assessment in December 2024. He stated that the U.S. export ban on EUV lithography machines is proving effective. Fouquet estimated that these restrictions will cause China's semiconductor industry to lag significantly behind the West by 10 to 15 years. Building a leading semiconductor industry requires far more than just financial investment. It demands immense and sustained research and development efforts over many years. This point is underscored by China's persistent inability to independently develop and manufacture lithography equipment comparable to ASML's advanced systems. ASML has spent decades and billions honing its technology, protected by a fortress of patents and deep institutional knowledge. Overcoming such a technological lead is an incredibly challenging endeavor. Fouquet also shared his perspective on the competitive landscape. He believes that having a few major players like TSMC can foster innovation. He expressed confidence in Samsung and acknowledged the strategic importance of Intel to the U.S. efforts to bolster its domestic chip production. His comments paint a picture of a dynamic but highly concentrated industry at the forefront of global technological competition. For ASML, China has been a very important market. In 2023, sales to China accounted for roughly a quarter of ASML's total net sales. However, the escalating export restrictions orchestrated by the US are set to change this picture dramatically. ASML projected in late 2024 that its sales to China would likely drop to about 1/5 of its total revenue in 2025. This anticipated decline underscores the direct financial impact of these geopolitical maneuvers. In late 2024, ASML issued disappointing guidance, slashing its sales forecast for 2025. This news led to a significant 16% drop in its stock price on a single day. Despite US pressure to halt its activities in China, ASML prefers to continue servicing and repairing the machines it has already sold there. CEO Christophe Fouquet argues that maintaining a service presence is strategically sound. By servicing the equipment themselves, ASML retains a degree of control and oversight. This is a pragmatic approach in a difficult situation. Taiwan Semiconductor Manufacturing Company, or TSMC, has shown remarkable resilience. In Q3 2024, TSMC's net profit rose 54%. Revenue surged 36%, driven by demand for AI chips. TSMC forecasts Q4 revenue up to $26.9 billion. CEO Dr. C.C. Wei confirms AI demand is substantial. Investor confidence remains strong despite US-China tensions. TSMC's share price soared 75% year-to-date. TSMC adapts to heightened scrutiny and regulations, enhancing customer scrutiny after Huawei incident, must comply with US export controls. Success hinges on managing compliance demands. Investors believe in TSMC's technological leadership. TSMC's growth in AI is crucial amid global trade restrictions. The ongoing struggle over semiconductor technology represents a central battleground in the broader technological and geopolitical rivalry between the US and China. This isn't just about which country sells more chips, it's about who controls the foundational technology of the 21st century. A primary motivation behind the US and allied actions is the desire to safeguard Western national security. There are deep concerns that China could leverage advanced semiconductor technology for its military modernization programs. By restricting China's access to the most advanced chips and chip-making tools, the US and its partners aim to slow down Beijing's progress. One of the most significant potential long-term consequences of this chip war is the fragmentation of the global technology ecosystem. We could see the emergence of two separate spheres of influence, one led by the US and its allies, and another centered around China. This bifurcation could stifle global innovation, reduce interoperability, and increase costs for consumers and businesses worldwide. The current instability and the prospect of further decoupling threaten to disrupt supply chains and increase uncertainty. The actions taken by the US and its allies are part of a long-term strategic calculation. The core idea is to prevent China from gaining a decisive technological advantage in areas critical for national security. This isn't a short sprint. It's a marathon. China's response has been predictable yet determined. Beijing is doubling down on its efforts to achieve technological self-sufficiency. This involves pouring more state resources into research and development and fostering domestic champions. However, the challenges facing China are immense. True innovation in semiconductors requires a deeply embedded ecosystem that includes world-class universities, a highly skilled workforce, and decades of accumulated knowledge. Building such an ecosystem takes time, patience, and a conducive environment for discovery. The outcome of this chip war will profoundly shape the geopolitical landscape of the 21st century.